What's up, traders? In today's video, I'll be showing you how you can identify trading opportunities like this using multi-time frame analysis. So stay tuned. If you've been enjoying the content but would like to have a little bit more access to myself, then I suggest you check out my Patreon. For only $10 a month, you will gain access to one-on-one coaching with myself, as well as access to my premium Discord server called the Camelthorn FX Trading Floor. More information, as well as the link to join, can be found in the description below. So today I'm going to be showing you guys how I managed to get involved in this beautiful bullish rally on GBP USD this past week. I'm going to be using the bar replay tool, and I'm going to be performing multi-time frame analysis to give you guys more of a practical indication, more of a practical feel of how multi-time frame analysis can be used to find these trading opportunities. So what I'm going to be doing is I'm going to be pulling price action back to around about here, the 24th of January 2023, but I want us to start on a completely blank chart. So starting off here on the daily chart, we can obviously see that we had this prolonged period of bearish price action before. Back in September 2022, price action switched bullish, and we have been trading bullish ever since. Now, if we're marking out our external swing structure from this particular low point in here, essentially what we have is we have price action putting in higher highs, putting in higher lows. Obviously, this would have been the most recent relevant daily swing break of structure, which would have then led to the formation of this new high. And now price action is currently trading within this particular bullish range. Now, once we have established where our bullish range is, you can see that we have our daily strong low down here. Why is it a strong low? It created a new high. We obviously have our daily weak high up here. Why is it a weak high? The anticipation is that this weak high is going to fail to create a new low. Therefore, we would then, because we have an underlying bullish trend, we would like to see this particular weak high taken, right? After we have that established bullish range, what we can then go ahead and do is we can mark out our premium and discount. Now, obviously, as you guys know, everything below our equilibrium is well priced for buying opportunities, referred to as our discounted pricing. So what we can immediately see is we obviously have this daily demand zone in here that is well priced, sitting within our discounted zone. And then we also have this particular daily demand zone that sits at the equilibrium here, which more importantly has recently been mitigated, all right? And we've seen price action give us a nice strong bullish rally off of this particular daily demand zone. Now, as I have said in previous videos, as soon as price action reaches the equilibrium, we can anticipate the weak high to be taken. Obviously, there is always a possibility that price action can trade a little bit lower, especially because of the fact that we have this unmitigated zone with a little bit of imbalance left over. But on this particular occasion, we have a really nice bullish reaction from this daily demand zone. So we can now tentatively mark that particular low out as our potential new higher low. All right. Now, obviously, after that nice bullish rally, we can see that price action attempted to take the weak high. However, we had a failure to violate that weak high. Now, why did price action fail to take that weak high? Let's investigate. We can see that we have this daily supply zone in here. As you guys can see, we had the formation of this new daily swing high. All right, obviously we had our daily change of character, which occurred in here. We had that imbalance. Price action, after forming that high, never mitigated that zone on its way down to this particular demand zone. Right now, as we've said previously as well, any unmitigated zones tend to become reaction points in the future, and that's what we saw this past week on GBP USD with this particular supply zone, right? Price action trades into that zone, and then we get a small bearish reaction from that. Now, after we get this particular bearish reaction, we can see that we don't have really large volume bearish candles, okay? And one thing that actually stands out to me, if we zoom in a little bit more, is the fact that price action was interacting with this zone in here. Now, this is a more advanced way of identifying POIs or identifying supply and demand zones. But essentially what happened here is we have a range, all right, a period of consolidation or a range on our lower time frame in here, right? And it is denoted by these wicks in here. Now, this particular zone technically is called a sell to buy range, okay? And you can see that we had really nice rejection off of that, all right? So with our daily analysis done, what is our overall anticipation of price action going into a particular trading session? Well, because we have just seen the mitigation of this demand zone, our anticipation is that the week high is going to be taken. Obviously, price action has come in and given us a bearish reaction. So now, from an intraday point of view, we want to see whether or not we can get a bullish continuation from this particular zone, okay? From the daily chart, we're going to now drop down to that 4-hour chart, and we're going to repeat the process. Now, straight off the bat, you can see that this sell to buy range, this sell to buy POI that we marked out on the daily is obviously going to be a valid 4-hour zone in here, all right? So what we're going to do is, before we even get to identifying our swing structure, what we're going to do is we're just going to go ahead and we're going to mark out that particular zone as a 4-hour POI already. Now, once we've done that, we can zoom out just a little bit more and we can assess what price action is doing now on a 4-hour time frame point of view. So obviously, as you guys can see, we have our daily bullish range in here, all right, where we have our bullish break of structure. We have that push to the upside, and then we have the formation of that new daily swing high, all right? Now, another thing that I want to draw your attention to is notice how from swing low to swing high marks out our daily external structure, but within that swing low to swing high move, we have this internal 4-hour bullish structure, all right? Now, this is something that will take a little bit of practice. It's very easy to get caught up marking out internal structure when actually you want to be marking out external structure or swing points, all right? Now, we know that this particular daily high is a valid one because we had a 4-hour change of character in here. Now, you can see that change of character by the wick to the upside in there, all right? Very, 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 very small, but it definitely did occur, followed then immediately by a break of structure to the downside, which gives us a valid change of character in here, which obviously then confirms that daily swing high. So after we get a new swing high, what can we anticipate? We can anticipate price action to pull back lower. We can obviously see that this is that daily demand zone which was mitigated. So from a 4-hour external structure point of view now, what does that look like? Well, essentially, after price action puts in this high, we have price action pulling back down. We have this low that forms. We obviously have this period of consolidation which took place during the festive period. But then essentially what we have is we have price action pulling back, and then we have another break of structure to the downside. Now, in this particular scenario here, because of the fact that we had this, I guess you could call it an internal pullback, which didn't really take out anything significant, I would then mark out my 4-hour swing structure as from this high to this particular low down there. So looking at our external 4-hour structure denoted by the red dots in here, you can see that we have two bearish breaks of structure as price action pulls back into that daily demand zone, after which we have a really nice strong bullish reaction. And then we have two bullish breaks of structure to the upside, which then takes price into that daily supply zone, which sits just at the top of our daily bullish leg, all right? So what we then can do, we can then mark out our 4-hour strong low down here, as well as our 4-hour weak high, which sits up here. Now, as you guys can see, our 4-hour external structure is in line with our daily external structure. My 4-hour weak high sits at the exact same point as my daily weak high. Remember, my daily weak high starts essentially at this point in here, right? So essentially what we were then anticipating is we're anticipating price action after this particular 4-hour high forms. we're anticipating that pullback. We're anticipating a mitigation of a well-priced demand zone before price action continues up towards that week high. All right. So obviously what we can then do as well is we can bring in our premium and discounted tool in here. And then as you guys can see, immediately we have this particular 4-hour zone, which just so happens to be that sell to buy range, which we identified on the daily chart. We can see that that zone sits exactly at the equilibrium of our bullish 4-hour range. All right. So we want to see a mitigation from here, and then we want to see price action push up. Now, we obviously have another 4-hour demand zone which sits in here, which is a valid demand zone, which we can anticipate a potential mitigation of. Now, at this particular point of performing your multi-time frame analysis, as a swing trader, you could quite comfortably look to trade from either this particular 4-hour zone or this 4-hour zone. All right. One thing you could do is, because we are now anticipating price action to take that week high, one thing you could do from a swing trading point of view is you could look to trade, because you now have this slightly more refined zone that sits within that larger sell to buy range of the daily chart. You can then look to either play the open of that 4-hour range, of that 4-hour demand zone rather, okay? And then you aim for your week high, obviously. Or you can look to play the midpoint of that particular 4-hour zone, just to give yourself a slightly better risk reward ratio. Obviously, you want to make sure that you give price action just a little bit of room, because of the fact that you have this demand zone that sits a little bit deeper. You've got a little bit of imbalance that sits there. And whenever you have a scenario like this, where you've got a POI sitting below another POI, just remember that the POI that sits above can also act as a form of liquidity. Because think of it this way, all right? If you are someone that is looking to enter via a buy limit order off of this POI in here, your stops are naturally going to be below that particular POI. So because you have stops sitting underneath that particular zone, you essentially you're essentially contributing towards the liquidity that sits below here. All right. And then you could look to play this particular zone. Okay. Now, obviously, we also have a nice shelf of liquidity that sits just above this particular POI in here. As you can see, you have nice relative equal lows down here. So both POIs definitely valid to trade from. Okay. It all depends on what kind of trader you are. So before you even get to your lower time frames, just by performing your analysis on the daily and the 4-hour, you have already found a potential trade opportunity here. Okay. But what we're going to be doing is we're going to be dropping down a little bit lower. You need to be aware as well that our daily week high has just failed to be taken. Okay. We are reacting off of a daily supply zone because of the fact that we have this 4-hour in here, because of the fact from a daily point of view, we have this unmitigated demand here. There is a possibility that this particular low, because it failed to create from a daily structure point of view, there is a possibility that this low could be weak. Okay. But it's just a case of keeping those things in mind, but you want to make sure that you're following your 4-hour closely. All right. So from the 4-hour, what we're going to now do is we're going to drop down to that 1-hour chart, and we're just going to look for a little bit more refinement. So straight off the bat, we can see our 4-hour range in here with price action pushing to the upside. All right. We can obviously see that internal 1-hour structure as price action pushes up. Now, one thing you see in here, okay, and this is where I want to open your mind's eye to how price action tends to interact with weak highs and strong lows, right? So in this particular scenario in here, we can see that our internal 1-hour structure has been bullish up until this point, okay? So once price action puts in this particular 1-hour swing high in here, because of the fact that we have a valid 1-hour change of character that takes place in here, we can comfortably mark this out as our new 1-hour range. Okay. So what we then have is we have our 1-hour strong low down here, and then we have our 1-hour weak high up here. And then once we bring on our premium and discounted tool, we can see that we have a clearly defined equilibrium where price action is traded into before continuing higher. All right. So at this particular point in your analysis, you might be thinking to yourself, okay, cool. We have the 1 hour pulling back, right? We come into our equilibrium of the 1 hour bullish range, because remember, this is my bullish breakup structure to the upside. This is my equilibrium. So realistically, I'm looking for price action to interact with something in here. But let's just say for whatever reason, you can't quite see something of real interest down here, okay? Or maybe you missed out on the opportunity and then price action continues higher. Notice how this particular attempt to take the 1 hour week high has failed. Why has it failed? Because we don't have a break and close above the week high. We only have this particular wick in here. Now, what that is telling me is, it's telling me that this 1 hour week high is still intact, and it is telling me that this particular 1 hour low has failed to create. Therefore, this particular 1 hour low is weak, and we can anticipate that particular low to be taken. Now, obviously, you can see our analysis from the 4 hour chart. You can see this particular area of liquidity that has been building, all right? You can see my 4 hour equilibrium, and you can also see my 4 hour demand zone that sits in here. So if you're coming into a particular trading session, having performed that top-down analysis, seeing the fact that this particular 1 hour week high is still in place, what you're doing is you're anticipating price action to pull back down. Now, on this occasion here, what we actually see is we actually see price action interacting with this 1 hour supply in here. And this is significant because essentially what we have here is we have a failed attempt, okay, to take the week high, and then we have a POI which forms right after that failed attempt. So what we are now anticipating is if this particular 1 hour supply area can hold, we could potentially see price action being pushed down towards this 4 hour supply zone, okay, or this 4 hour demand zone rather, excuse me, before that underlying bullish continuation. So just in here, okay, you can already see that there is a potential counter trend short opportunity. So what we can do now is from a 1 hour point of view, if we just allow price action to play forward, we can see that price action shoots all the way down towards our 4 hour demand zone, grabbing our liquidity in the process, okay? So if you were that swing trader that decided to place your buy limit order either at the midpoint or the open of your 4 hour demand zone, you would have now been tapped into this particular trade. All right. Now, if you drop down to that 1 hour, you could do the same thing, because essentially what you've seen is you've built a little bit more evidence supporting that we might see a nice bullish reaction from here. All right. So from the 1 hour point of view, you could still look to trade this particular 4 hour zone as well. Right. We do have a little bit of refinement that can be done on the 1 hour in terms of this particular demand zone, but for the most part, you're trading from this. All right. So from a 4 hour point of view, from a 1 hour point of view, you have now managed to find an entry. But let's just say, for example, and you can see the really nice large bullish reaction that you get from there. All right. Let's just say, for example, that you wanted to wait for price action to trade into this POI, and then you wanted to wait for a change of character to occur on your lower time frame before getting involved. So in this particular scenario, let's say your lower time frame is the 15-minute. So once we drop down to that 15-minute chart, okay, and obviously at this particular point in time, we can also mark out our 15-minute swing structure. And that swing structure would essentially look something like this, okay, where we have this very nice bearish breakup structure to the downside, obviously creating our 15-minute strong high at this point up here. We know that it is a strong high because this particular high created a new low, all right? And then we can mark this out as our now 15-minute week low. And then we can obviously bring on our premium and discounted tool just to define that range a little bit more. So what I'm going to do now is I'm going to take a quick intermission to talk about this particular scenario that we see here. Our 15-minute chart based on our external structure swing points is telling us that we are bearish. Okay, we can see, yes, that price action is traded into a 4-hour supply. Okay, and we've gotten that nice bullish reaction out of that supply. But because of the fact that our 15-minute is pointing bearish, we have some conflicting information. What you essentially want to do is you only want to be trading price action up until premium pricing of this particular 15-minute bearish range. The reason you want to do that is because if price action were to mitigate something in here, you would then anticipate the 15-minute weak low to go. As soon as your 15-minute strong high is taken, then you know, all right, that this particular scenario has broken down, and you can then aim for your 1-hour week high. So if you are someone that is placing a trade purely based off of your 4-hour chart, okay, you can place your take profit at this particular week high. Okay, if you are taking your trade off of the 1 hour, what you can do is you can place your take profit target at either the 1 hour week high, or you can place it at this particular 1 hour supply zone. Why? Because you're just targeting this imbalance to be filled. But if you're someone that is looking to take that trade on the 15-minute chart, what you want to do is you also want to aim for any POIs like this particular 1 hour. You can actually draw on this 15-minute POI in here. You essentially only want to be targeting POIs that sit within premium pricing. Why? Because the anticipation is for price action to pull into premium pricing before rolling over. Does that make sense? So brief intermission over. What we can see here is we can see a valid 15-minute change of character. So if I take this tool and I hide it from the minutes chart, we can see that we have this valid change of character that took place within that overall 4-hour demand zone, right, on the 15-minute here. So now, because you wanted to see that change of character take place within your higher time frame POI, what you now want to do is you want to look for price action to trade down towards this particular wick zone in here. So you can either mark it out as this candle, right? Or you can mark it out as this wick zone. Why? Because this is essentially a lower time frame range, yes, that led to your change of character taking place. Now, once you mark that particular zone out as your 15-minute demand zone where you want to see price action trading into, you would essentially then look to either play the open of that particular zone, right? Or you could look to play the midpoint. Now, for me, what I did is when I saw this particular zone, I placed my buy limit order on the midpoint of the 15-minute zone. I gave it like a 15 pip stop, and all I was doing is I was aiming for this particular 15-minute supply zone in here. Obviously, I knew that there was a high chance that price action was going to push towards that 1 hour week high, but I just wanted to play within the extremities of this particular 15-minute zone. All right. On the 1 hour chart though, what I did is, all right, I placed a buy limit order at the midpoint of this 4-hour zone. I gave it a 25 pip stop loss, I believe, somewhere around there. And then what I was doing is I was aiming for exactly the same. I was aiming for this zone in here. Now, once price action develops a little bit more, as I manage the trade, I can then obviously move my take profit a little bit higher. But essentially, all we're trying to do is we're trying to trade in that direction, all right? So if we drop down now to the 15-minute chart, and if we press play on price action, just to see how this particular thing plays out, you can see that we have that initial very strong bullish reaction from the 4-hour zone. Now, this price actually takes a while to come back down to this particular zone, okay? And as we continue playing price action forward a little bit more, this is where the key came in for me. As price action trades into our Asian session, what you can see is that price action starts building this little pool of liquidity just underneath the Asian session. So as soon as I got to my charts, right, I believe this was Wednesday, the 25th of Jan. As soon as I got to my charts and as soon as I saw this liquidity that was reinforced by Asia, right, I knew that this was a really nice zone to place those buy limit orders on, having already gotten involved in this initial reaction off of the 4-hour POI. All right. So what we then want to do is we want to see whether or not at the open of the London session, we want to see whether or not price action can grab this liquidity, tap into our POI before continuing higher. All right. So let's just see how price action plays out. So during the Asian session, we see price action moving around. We then get price action stepping in eventually after the London Open. We eventually get price action dropping down into that 15-minute POI, all right, that 15-minute demand zone. And now we are involved in another trade. And essentially, that's how we got involved in this bullish move, right? This nice bullish rally on GBP USD after price action traded into that 4-hour demand zone. You can see that price action pushed up really nicely, tapping into this particular zone. Okay, our take profit was reached on this particular trade. If we drop out to our 1-hour chart, you can see that our take profit was reached there as well. And you can see that after price action trades into that particular 15-minute POI, you can see that we have a very sharp rejection of that bullish pressure. And this is why it is sometimes beneficial to only aim for that imbalance, to only aim for those POIs. Even though you're aiming for price action to push higher, you can see that if you decided to hold price up until here, this particular reaction might have spooked you. All right, as soon as price action rejects this might have spooked you, and then you might have closed your trades in there. All right, obviously if we play price action forward, you can see that we have a little bit of wick filling. Price action continues higher, right? And then what is significant in here is from a 1-hour point of view, we essentially have price action creating this particular zone, which is an important zone. It leads to the failure of this supply. And then if we jump price action forward, we can see that that zone gave us another mitigation and another attempt to take this week high. So at the moment, price action on GBP USD is still struggling to reach and violate that 4-hour, that 1-hour, and that daily week high. All right, but price action definitely still pushing bullish. Want to see how this one develops over the coming week. All right, so that's how you go about finding trading opportunities using multi-time frame analysis. All right, it all starts with being able to identify your external structure swing points, selecting your POIs, your well-priced POIs, and then having a trading plan that will allow you to execute a trade consistently. All right, if you guys enjoyed this video, please make sure that you give it a like, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.